Well, as we come out of this meeting, traders, our clients, are going to be looking for some specific metrics to see how these changes are affecting supply and demand. The first one that we look at, of course, is inventories. So at a key place like Cushing, Oklahoma, where the WTI contract is based, we see record inventory levels there, 40 million barrels. They're very high. And we need to see if inventories at places like Cushing start to draw down. Another important metric to think about is pipeline flows, to get oil from these places where it's accumulating. If you think about West Texas, which is the powerhouse of U.S. production right now, we saw 2.2 million barrels a day through these pipeline flows. This is an extremely high level. Between pipe and rail, can we get all the oil where it needs to go?
There's a lot. Okay, so here's a macro question then for you. The price of oil in November had its worst month in over a decade. Is it because, A, there's simply too much oil in America and the world, or B, the market is discounting, is reflecting a future slowdown in global economic growth, or C, some combination of the two?
It is a combination of the two. So supply and demand are both equally important. If we think we're getting supply overhangs in key production areas, that's going to depress prices, and it's going to change the forward curve for oil as well, making people skeptical about the medium term. You have to think about the trade tensions as well when it comes to the demand side. If corporate earnings suffer, if there's less trade as a result, then there's going to be less demand for fuels, less demand for crude oil.
And I know for our viewers, we've had to deal with, we talk a lot about countries, right? Russia may want this, Saudi Arabia may want that, the UAE may want this. I got to throw another country in the mix.
Sure.
It's not America. It's Canada, because call it the Alberta surprise. A couple of days ago, if our viewers remember, the Canadian government kind of taking a draconian measure, and they're going to knock out about 300,000, 350,000 barrels a day of production due to pipeline issues in Canada. The reason we mention Canada here at OPEC in Vienna is how much does that 300, the world just cares about the overall amount of oil. How much does that 300,000 plus barrels in Canada, the surprise, matter to the calculus here?
It does matter here. It matters for global markets because Canada is one of the key places where you have this oversupply of oil. Local prices are really depressed compared to the price of oil that you get in Texas, on the East Coast. And so these production cuts are designed to rebalance the market. What's really interesting is that just this past week at Genscape, we detected in real time a pipeline outage, which started to back up that oil again. It was equivalent to a couple of days of those supply cuts. That means you have to run the cuts for longer to get the same inventory drawdown.